yesterday we did have a pretty nice pullback in the morning. Um, the funny thing about it is it was very similar to, it was pretty much the opposite of what we were seeing as we started to get oversold on the way down. Um, we got a really clean pullback on the failure above 257. And what did we hit? We hit the spot where they bought Friday afternoon, and the market was bought. And if you hung in there for a few hours, eventually you got to see a retest of resistance from the morning. So buyers in control. It's the definition of buyers in control when a pullback is bought, as opposed to pullback, consolidate, break down. So that's the same way that we talked about as we got to the bottom, looking for a change. It's the same thing here. And generally, as a general rule of thumb, tops are trickier than bottoms, just the way it's the structure of market. As markets accelerate to the downside, it's pretty much a given. You're going to get a really good bounce. The difference is when things accelerate to the upside, sometimes the market just peters out and moves sideways for a while, and everything catches up and then it goes up again, as opposed to, like this sort of thing. I suppose if we went straight up for something, like then we would pull back to the trend, but not necessarily guarantee a reversal. So it's down move, some sort of retracement or consolidation near the low of the down move, and then a break to the downside. That could be the beginning of a larger pullback. Now we pretty much erased the down move from the day of Powell's initial comments at the Fed conference, the press conference. We talked about yesterday, IWM's already obviously overshot to the upside, but IWM really got killed on the downside on a percentage basis. That's why I liked it for a larger bounce than the SPYs on a percentage basis, which it's done so far and continues to do, although that's getting overextended as well. We'll look at that in a second. So here's yesterday. So yesterday morning, I was looking for a pop into this area here to short. And that doesn't become the spot to short today, because we absorb the selling pressure, we're at higher prices, and we look for a spike a little bit higher. So something moving away from this trend line. It's probably something above 258. We're right now 257.75, but a spike above 258, mid 258s. Then we get back down, start to pull in, start to hold below 58. We look for a pullback. Same thing as yesterday. Although I'm not banking on the fact that we're going to have a $3 pullback 2 days in a row. So let's see, 256. 256 looks kind of interesting to me. Let's say starting range for today, 258, a little bit above, and on a pullback, $1 from where we are now. Let's call it 256.70, and then 256. The other thing we always, obviously, as we move higher, we look for some compression. We're getting that yesterday. Yeah, it's about a 1% range. So we'll look for less than a 1% range today. On IWM. So I imagine. Yeah. So where are we? So we're back to, what is this? We're above 141.60, which had been, at the beginning of December, we tried to bounce off of that. We bounced from 141.60, bounced actually about $5. $5? Yeah, $5 here. We're back above that level. And above there, I don't really see anything. About 142.5, I guess. We're almost there in the pre-market. So 142.5 to 143, where this gap down day was December 14th. We opened down here around 141.5. We popped to the high 142s, and that was then the beginning of a reversal and really the big down move. So we're right there. So we'll see if we can kind of spike above 142.5 on the open, and a failure there and gets below 142. Then I would look for the pull into 140. And you can look at the size of the last few days. We started at 134, had the break above 136, had the retest, closed above. Then a couple of days ago, this is Monday, we took out the high and we went up $3, almost $3. And yesterday, the pullback was much shallower than the SPY pullback. Didn't even get to Monday afternoon support. Got to about within a half a point of it. And so we're really on a multi-day very short time frame. IWM really starting to get stretched here. And I would say a 50% spike from where we are right now in the open should be fadeable from a risk reward. It's good risk reward and probably no more than 20 cents of risk and something like that. Let's take a look at the Qs. So good recovery on the Qs has absorbed the bad Apple news back up to 160. Spend some time in here. That would be pretty constructive for the Qs. A lot of this explosion to the upside getting to 160 is probably the big move in Netflix. Obviously Amazon as well. I noticed that Netflix was actually negative in the pre-market. We'll take a look at that in a second. But yeah, I would just pay attention to if this starts holding below 160. Yesterday's pullback low, it was pretty vicious. 57.5. So let's say there's some support here between 159.60 and 160. And if it starts to hold in this band here and breaks to the downside, there's probably a short trade there. All right, STZ. So STZ is not the easiest stock to trade. I would expect it to have a wide spread, especially on the open. So that's out of the way. So let's see what it's done this year, or in the last year. Remember they announced their investment in CGC probably right around here. It was above 200. It's come off 30% now from there. It's coming into not quite the 2017 support, but it's getting close. But basically in the pre-market, it's gapping down into this consolidation range from November of 2016 to February of 2017. Then it started to hold above it and just have this massive uptrend. And we had a wider consolidation, which resolved to the downside. I guess as the market broke down in October, we got a retest to 200 before this move. So it seems oversold to me. They did guide down, but it is now down. This is probably about 30%, this down move. So it's a lot. It's erased this entire uptrend. It's done almost 1 million shares in the pre-market, which is great. We're obviously getting a lot of information on this. It normally only trades 2.5 million shares a day. So it's done about 40% of its average daily volume. So looking at it in the pre-market, buyers stepped in at 150, it had a $3 bounce. They stepped up here to 52. They failed to hold it. So the sellers have actually taken back control. Notice as it's spiking into 52, people are just selling it here. So it looks like for the open, right on the sheet, like 150 as first support. Basically 150.50 to 150. This band right here. And then I have 156. Okay, so that's the first real resistance. So we have pre-market. This is a good distance away from where they're kind of selling it in the pre-market. So I guess if first move is up, you get something like this. Wait for a move to 56. Something like that. Then if this is really the news is really baked in, the upside is actually to 159, 160. The fact that the volume is so high in the pre-market and they're willing to hold it down here would lean towards against it getting the bigger bounce. But we'll see see how much volume it does in that first bar in the open. compared to what it's done in the pre-market. That should be very telling. Then on the downside, we talked about the long side first, because I think, as I said, bigger picture, I think it has gotten really crushed over the last 6 months. But the downside to the next major support area below 50 is quite a bit of ways. It's really the mid 140s. So I put 147 as the first support, but if they're selling it all day today, that somewhere between that 145 and 147 would be what I would be looking for a bottom. Again, I consider that the less likely scenario, but certainly always open to either scenario playing out. The next one is SGH. So this one, well, first of all, it's a thinner stock. It normally does 500,000 shares a day. So that's something to keep in mind. The spread might be a little bit spready, even though it's a $25 stock. Just want you to see what it's done over the last couple of years. So it was in a really nice uptrend after they IPO'd. And it's been weak. Basically, it topped out March of last year, and then it put in a lower high at June 1st. And then it looks like they reported on this day it actually gapped up 34, failed there again. Now we're gapping below the bottom of this range. So it brings into play basically this gap up from 5 quarters ago, it looks like, where it gapped up to 24.80. I don't know if this was earnings, but this caused a pretty big up move. So we're coming into that. Oh, I also wanted to see, what the volume is on the heavy volume days. Okay, so it did 7 million shares here back in October, so it looks like you could pretty easily do 3 million plus shares. So it should be pretty liquid. So initial move after the earnings was a move down to 26. It popped back to 28 where it was sold. So now we have, basically on the open, if it reclaims $26, then you would start to think about a move to the after hours high up here above 28. What do I have on the sheet for it? Okay, 27, 28. And then for support, we have 24, 24.60. Almost got to 24. And it's actually done really good volume. It's done about 30% of its average daily volume. So we're getting some pretty good information here. Seller is definitely in control right now. You would have to, at a minimum, reclaim this 25, start holding above 25, and then break to the upside. That would be a decent reversal type trade. Other than that, a flush and into the 24 support and a hold into that. Let us go to Lennar. So Lennar, not really reacting much to earnings. I wanted to put it on here. The home builders have been showing signs of bottoming recently. So I just wanted to keep an eye on this. And they were just very beaten down. And so the good thing about this is it's beaten down. It's in this huge downtrend. And kind of, works its way out of this consolidation and breaks to the upside. We have some room for it to run up into the high 40s. Let's take a look at Toll. Toll is the leader of the sector. So you can see actually Toll already broke out of its consolidation to the upside. And that happened. I don't know if that was the market. Probably was just, maybe it was a catalyst. It's a pretty big break over the last few days. Went from 33.5 to almost 36. So this definitely was coming into earnings. It was at 40 a few days ago. They're buying it. What did I put for support on here? 41.90 to 42. I can kind of see why I did that. And then resistance 44. So up here. So I would say right on the open, if it actually, you notice it's just being bought at this 43 here, and you want to get long it with a tight stop, that's an interesting trade. Other than that, if it starts sticking down on the open, I'd want to see one of these support prices from the last couple of days, see if it sticks there. And if it just kind of flashes down right on the open a little bit, and you notice it's starting to hold above 43, you could use that as a trigger to get involved. All right, Roku. So Roku might have been the most active stock on the open yesterday. So it did have a huge move the prior day. I didn't talk about it in the morning meeting yesterday. I guess my thought was I thought it might be a little bit too wild for some people, or a lot of people. It ended up being even wilder than I would have expected, because Citron came out negative on it. The idea was that it ran up so much that on the gap up, it was a good idea to sell it to see how much it would pull in. I'm actually surprised it bounced as much as it did in the afternoon, got above 41. Let's zoom in. So initial drop was like a quick $4 drop, and Citron made their comments, and it went down another $2. It's actually a pretty clean bounce off of this 38, which I guess is where the second leg started the prior day. It's really clean. I mean, it was bought at 38, then they bought it at 39. So I guess if you're playing for a bounce and you were holding 39 and you risked like 20 cents here, you bought another $1.50, $2. Then it got bought at 40. So yeah, it was really methodical. So maybe it is 40. Well, it holds 40 this morning. Yeah, maybe this 40 by 41.5, 42 is kind of a settling down range for a day or two, and then we can kind of see which way it goes. I kind of thought the press release was was very misinterpreted, and that it was silly the size of the move. But the fact that people bought it up very methodically, and it erased a lot of this. And then even if you can look at it from the perspective of the move started at 35, the fact that it was able to close above 40 yesterday, it's pretty bullish. But we'll see if that was a kind of a one-day thing. Maybe it's just because it came off from $75. But I would say the longer it can hold above this $40, the more bullish it is. Even that 38 is going to become a big level maybe over the next couple of weeks if it fails here above 40. CGC, that's the company that STZ had invested in. Forget their investment price, 30 was higher than this, maybe 37. Let's see. Yep, 31. I guess on a percentage basis, it's an okay bounce, with the market, but 26. It's a 20% move. I guess it just got so beaten down. It looks like it hasn't really bounced. Yeah. I suppose a quick pop on the open above $31 and it actually held. That might attract some attention back into this consolidation range that lasted for a couple of weeks. AXCM was pretty interesting again yesterday. AXSM. I don't know why I keep on saying AXCM. So let's see. So it did pop right on the open, but failed at $9. Rolled back down to 8, where I'm sure people were looking to buy at pre-market support level. And got up there again. Usually when something like this happens, and then you have this buying like this, I think most people are expecting it to break to the upside, but it didn't. It actually broke to the downside. But I think as long as this thing is above $8, you have to assume that it could have a pretty vicious break to the upside. Again, it had a huge move. Tried to roll over yesterday. Didn't really try to roll over. It was bought on the open, pulled back to the opening price, was accumulated the rest of the day. They did sell it into the close, but looking at it this morning, it's still above, it's above $8. So I might have alerts at like 8.25, $8, 7.80, just in case it does start to change momentum. But any type of move today, when you notice it's holding above $9 for more than like 10 minutes, you're looking for upside. CLVS yesterday had a big move. Let's hope with that. It was very strong. They said they're open for business in terms of being willing to sell the company. And so it had this move. This was probably news driven on one of their drugs. It failed here at 23. I think we looked at it then. I was surprised that it came back as much as it did. But if we look at it from where this started from the it has doubled off the lows, by the way. But the original down move was some good news. It was in the 30s, and then they killed it, 20. And that news came out again and failed again. I would say, as long as if we could get a few days of consolidation above $23, this one might look interesting for a move back up to 28, especially if people start to believe that they would sell themselves. That's it. As always, let me just take a quick look at the SPYs. Oh, yeah, I did want to mention Netflix. So Netflix was actually had a pretty good pull-in on the open, but it's like a microcosm, even though it's had a ton bigger bounce than the SPYs on a percentage basis, because it's a momentum leader. It's the same thing. It failed at 320. You had the hard down move to the prior day's support. It actually took out 310. It was a really good down move. So anybody who was shorting it on the open, you got rewarded. You just want to be careful. The same way on the SPYs, when you get a $3 down move, once it puts in a low and comes back up and starts to hold the original low from the open, and then you have this move right here back above 315, you don't really want to be shorted anymore. Maybe when it pops back to if it pops back to 320 or something, you put it on because the reward is good again. But the buyers are in control of this one, and so if you're doing this with stock as opposed to buying 305 puts or something for Friday, where you're playing for it eventually topping out here and rolling over hard by the end of the week, you want to be pretty careful about not giving back. If you capture a nice down move on the open, and then you capture the second leg, you don't want to really give back more than 20 or 30% of what you made, because again, it's just tops are trickier. It is I do think it's a short in this area here, but it's you want to manage your risk there and understand that when you capture a nice hard down move like that on the open, you want to use those profits to kind of finance potentially a move over the next few days to the downside, as opposed to giving back too much of that. But again, I do think the bounce off the lows was huge. It's that and Amazon are probably the strongest, and you just want to be a little bit careful in terms of where it tops out. Because even though I think it's a good short here, that might end up being the top. So the longer we could actually get some time here between, let's call it 308 and 325, if we could get a few more days, maybe we get a bigger move. So I have nothing new to add than what I said on the SPYs, other than what I said at the top and in my notes in the game plan. As always, be patient and good luck.